Hi, Larry Berman here, and here's what's on my radar this week. Big event to me of the week was the expectation that the Treasury would have a big funding need in the next few months. And as Janet Yellen took over, I guess when all the checks and balances were done, Treasury had about $900 billion more in cash at the end of the year than they thought. So the choice, Yellen's choice was to run down the cash balances over the next few months. So the big $900 billion stimulus that just got put in is paid for, and therefore a lot less bond supply coming, which you would thought would have yields go lower. Yields have gone higher. That money that was, I guess, earmarked to go into the Treasury market has gone into equities. So we had a real boost to financial assets this week. I think largely was a big move behind that, backed by stronger earnings. So earnings overall have been pretty good. Continue to be ratcheted up in terms of forward expectations. So that's been a big positive as well. When we look at the difference, though, between large cap companies and what they've been earning and small cap companies and when they've been earning, so I've got a chart here this week, we're going to have a look at it, is basically going back 20 years now to the dot-com peak. And it looks at the Russell 2000, the IWM ETF, and what earnings per share have been on a forward basis. And what we can see was with the Trump tax cuts in 2018, we got a big spike up in earnings, but we really haven't seen much growth in the last couple of years. Obviously a big swing down with COVID. And so expectations for earnings are growing, but relative to where the IWM is today compared to where earnings are, again, we had a massive spike. So markets remain expensive. Small caps is where money is going on the reopening. But the problem is that earnings probably aren't going to match up, and at some point we've got some risk there. So want to keep that in mind. In terms of trades of the week, so on the bear side here, again, you got to think of these as a pair trade. You want to be short the higher risk small caps in this case, and you want to be long the reopening, but not on the small cap stuff, on the average S&P 500 companies. So long the RSP equal weight S&P, one of our favorite ways still this year to play a recovery, be long the average stock, not the market cap weighted stock, and to be short small caps with either RWM or a short position in IWM. That would be the trade of the week. Beyond that, not a lot to talk about. Looking forward to the weather starting to get warmer, actually. February is my least favorite month of the year. Super Bowl, huge Tom Brady fan. So go Tampa Bay. There's almost nobody that believes Tampa Bay can beat KC. I actually don't think they can do it. Let's go Tom Brady, best quarterback of all time. Big thumbs up. Have a great week, everybody. Don't forget, subscribe to our YouTube channel and click on the alerts so you know when we have new content out.